Hi, welcome to this video update, which is on the 25th of March. It's Sunday. Going to be looking at two high odds trade setups in our view. We're going to go to the charts in a moment. They're going to be USD JPY and Euro JPY. Done several videos on both these pairs in recent weeks. Just so bullish of the JPY, and so far so good in our recent trading, up over 500 pips in both pairs. But I think there's that and maybe even more to come. Again, the yen for us just out and out bullish, not just on the euro and USD, but on all major pairs. Now, in terms of USD JPY, I do expect a little bit of a bounce in the short term, but that bounce will be a selling opportunity in the terms of the euro JPY. See it as a sell right now. Now, in terms of our charting, just for new viewers to our videos, we do keep it very simple. We only focus on big levels that matter to key institutions, the big players in the market. To find those levels, we use our favourite tool in Forex trading, which is the COT, Net Traders Positions. If you are unfamiliar with this tool, you can click a link beneath this video and learn more about them. Just want to watch the video through right now. Just keep in mind what we want to do is always trade with smart money commercial hedgers when their positions diverge away from speculators. Now, just keep in mind when you're watching this analysis, it's my view as of right now. If you want to check my daily levels and view on these two pairs and 12 other major pairs, you can click on the link beneath this video, get all our trading techniques and our COT analysis, get live access. Okay, now we're going to go and look at USD JPY first, starting with the COT Net Traders Positions. Also, just one point I want to make very quickly. When we go to the USD JPY chart and I start drawing my levels, I call it Euro JPY, is of course USD JPY. Right, USD JPY first, Net Traders Positions first, then we'll go draw some levels, then we'll look at Euro JPY after that. Chart of the Japanese yen against the USD. Now, in terms of the COT, they always put the foreign currency first, okay? We're obviously in a moment going to go to a chart of USD JPY and draw our levels, but this chart is just so we can see how the commercials and speculators are moving in terms of the pair, okay? Now, in terms of the trade we've got on at the moment, which is short USD JPY, obviously very bullish of the JPY. Just for new users, I'm going to just show how we took it and how the COT can really help you get high odds entries. Now, over here at B, we wanted to buy. Okay, why did we want to buy? Because we'd spotted what had happened on A. Okay, now what happens, you can see it. The commercials build up longs into this bottom here. Speculators really go short against them. It's a 3-year extreme between the two groups. Goes up in favour of the commercials, 500 pips. Now, what we note over here, it's the same scenario. If the commercials really buying, they get even longer than they are over here. Specs are even shorter against them. It's a bigger divergence. So we thought, let's buy the yen, and we should hopefully get 500 odd pips. Now, it does what we thought, goes up, makes the same amount as A, but then she carries on for another 300 pips the upside, which is obviously good for us. Okay, so it's the COT that has given us this trade, also the COT that has been meaning that we've been holding the trade without banking out. And you do get, when a trend develops, the commercials will naturally shed their hedges down because they're hedges. Okay, that's what they're bound to do. Now, what we've got this week, though, is a big drop in terms of the commercial positions. The speculators have been getting out of their yen shorts, taking losses, and now the groups are not very far apart at all. Now, of course, the question is, obviously, the yen has been very firm. Is it going to remain firm? I personally think it will. However, the COT is warning us that there could be a bounce in USD JPY. So how do we view this in terms of entries and stops and targets and so forth? let's go get the chart the right way around, and we'll take a look. Right, we're on the Euro USD daily charts, and in terms of this setup, we've done plenty of videos, tracking this pair. Now, regular viewers will know our entry was here 112.70 as we just got through the 20-day moving average. Then she accelerates away, and in strong bear markets, we're always looking for the 20 to be the first level of resistance. So what do? We get down really nicely. One touch the 20, two touches, three touches, down. These candles can't quite reach the 20, down. These ones do, and we have a little bit of a battle. Poke through it, big poke through it, but we're settling back on it. This one away from it to the downside. Another test, double top there, and down and away. And regular viewers know that if we're in a big trend, we will normally look for the 20 to provide some resistance to any up moves, and then stick our stop well back from the 20. For us, it's a simple way of holding big trends and big moves, and this one is a big move. Okay, I personally think it's got more downside to come, but we looked at the COT net traders positions, and I think the odds of a bounce are high. So I personally think coming in fresh, sell the bounce. I mean, when we go to look at Euro JPY, to see the Euro JPY is sell right now. This one a little bit more cautious of if I was coming in fresh. Now, where could she bounce to? Well, the obvious level is going to be the 20-day moving average. So I just draw a quick trajectory line. Okay, so we obviously got lower highs and 20s here. For me, you've also got a quadruple top there because you've got 4 bodies. Okay, so really you've got 2 trend lines to sell back to. So you just wait and see if she comes up, sell a bit of weakness. Where do you want your stop? I'd be back behind 107, clear of that now. So let's say 107.50. Okay, sorry if I draw my line straight. So if she bounces up towards 106, 107.50, what have you got in terms of downside potential? I've done it in previous videos, but you'd be looking for the weekly support levels at 100 and then 90. So it's had a big move down, but there's far more weakness to come in our view. We've got to keep in mind that the yen is the #1 safe haven currency. Okay, we are getting a little risk off at the moment. Stock markets were very, very weak on Friday. If they really start to melt, then the dollar is going to fall. Okay, so you've got obviously the potential to take her on a bounce, but I would not be shy. If stock markets are really going down, just to take her on weakness and put my stop behind this first level rather than the second level. Second level for the bounce, first level if we get a sell-off. It's been a great bear trend. I think it's got a little bit more interesting with the way those COT net traders positions have lightened. Okay, so you've got the odds of a bounce, but I don't think it's going to be a big one. On the other hand, you've got the potential for a risk off as we come in to next week. Their stock markets are really weak on Friday. If the yen, the USD starts really going down on the yen, I've just come in, wouldn't wait for the bounce, stick my stop back behind the first level of resistance, which is, what is it? It's about 106.80. So a sell on the bounce or a sell on weakness as well. Now let's go and look at Euro JPY, because I really, really like the look of the way this one is setting up. So right, Euro JPY weekly first, and then we'll move to the daily. And right, on the weekly chart of Euro JPY, we're just going to look at the big levels. First of all, on the weekly chart, they will help us define entry, stop, and target on the daily chart. Now, I've drawn a few levels in a minute. I've already drawn 2 and noted a COT divergence, which I'll explain in a minute, particularly for new viewers. But where are we right now? In terms of CFD net traders, there's none for the crosses released by the CFTC, but you can create them yourself by just looking at what's going on in the two major pairs that make up the cross and then totaling up what the groups have got. We do it a simple ratio. Speculators 4-1 in terms of longs over shorts, which is pretty bullish considering we've come down 700 odd pips. Okay, commercials still remain bearish, 3.2-1 in terms of shorts over longs. Divergence is 7.2 between the groups. Now, in terms of how we use the divergence for new viewers, what we normally want to do is hit divergences of 10 plus. Okay, this is a divergence of 10 plus, so it's plus 15, and yeah, we see sort of struggling into 136 here. We go short, we immediately get stopped out as we go above 136. That will often happen to you with the COT. It's not a timing tool, okay, but you get another bite of the cherry. And what we did was we just sold some weakness, 136.50, down, and what we'll do is we'll track how wide the divergence is. Now, when you get a move come down from extreme, the divergence will drop, okay? But it hasn't dropped that much. 7.2 is still pretty high. And when we looked at this in our last video, when we were testing the 132 level, it was 8.4. So you're not really seeing these groups give up their views, which points to trend continuation. Now, it's been a nice fall, but there's another high odds entry in my view, and it's here. You've actually slipped below the 130 level. I think, if you look at it, we break up. We're trying to, really get away from this 130 level. We do it on that candle. I think now we're below it. That's very bearish. It will target this major support zone down at 123.50. We're at 29.59. So what's that? 600 pips. And you can see, obviously, you get the big reversal, and then we're just going down, lower highs. So there's a trajectory line. So I've got my eye on this level here. Longer term, I think we're going down to here. But obviously, we get to the first target, we'd be more than happy. Now, how would you enter this trade if you want to get into it right now? Let's go to the daily chart. On the Euro JPY daily chart, it has been pretty spiky. But for us, we are moving to the downside now. We know the big levels from the weekly chart. We know the COT. Okay. Now, in terms of this level here, we noted it 136 on the weekly chart. We did break briefly above it, sold back through it, and she had a nice move to the downside. Now, when you get a big downtrend in motion, you're looking for rallies to fade back to the 20-day moving average. And this rally was due. We'd fallen around 650 pips, oversold. Come to the 20, test it, poke through it, and then down, down, down. One more spike through it, tail exhaust. Down through the 130 level, which we have just seen on the weekly chart, is a key level. Now, we do break through it here on Thursday, but we don't follow through. We go back to test 130, can't get through, down to 129, and settle below 130, but blue. How would you get into this trade, as a fresh position? I would just simply sell it if we open red. Okay, so just get in. I wouldn't try and be too picky or wait for a rally. If a rally comes, then you can sell it. But you've always got the chance you can just run off to the downside. So I would just get in. Now, if she rallied, what would you do? Well, I'll do the stop in a moment. But if you look at this cluster of candles here, okay, one body, 2, 3, 4, 5, 6 bodies, 20-day moving average, right near a round number. Okay, you did get that tail through, but exhausted. So basically, the 131 level, it looks really tough to take out on a close basis. So let's say you come in fresh now. You would need to place a stop. I'll just do the rally in a moment. We've got trajectory line there. Okay, so you've got double trend line resistance. Now, I wouldn't just place my stop just behind 131. I always like to go one level back. I'd go through those two candle bodies there. Okay, so 131.70. I personally think you probably, if it opens low, would be safe with 131.50, but I'd always go one level back, and I'm pretty confident of this trend continuing. That's just my subjective view, of course. What would you do if she bounces? Well, if she bounces up towards here, I'd look for any weakness and sell her, or just sell her back through 130 again. I think, the odds now strongly favour the euro going lower. The Japanese yen fundamentals just out and out bullish longer term on other major currencies. The euro is a currency that's very vulnerable against the yen in our view, and I've discussed the fundamentals behind this in another video, which I won't do in this one. We just trust the commercials. Commercials still very short, speculators long. Had a nice move down. It's going to get hopefully better, and we could get down to those weekly support levels we looked at. Now, in terms, just for beginners, in general terms about the COT, it really does help you take trades that other traders won't see just by looking at a technical chart. And also, it will tell you where the big players are behind the chart, so you know how far a trend might run. And also that helps you with your stop protection. Yeah, someone said to me the other day, your charting is pretty brutal and simple, but it kind of works over the longer term. And I think that would be a fair description of it. Yeah, I've stressed this to beginners numerous times. It's not about pretty patterns going back, way left, where they don't mean anything in the context of the price action now. You focus on the price action now, you focus where the big players are, and trade that, okay? A lot of people just focus too far back on the chart, every twist and turn. Complete waste of time. And, a lot of people said to me it works. Well, I've never seen any of these pattern traders ever give their trades specifically, which we've done for about 20 years. So maybe they do make lots of money, but I'm not convinced. Anyway, that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.